Thanks everyone, and I'm going to introduce Philip right now. So Philip, I think you have already come across our post, and Philip is a research analyst over at Montaka Global Investments. So this is a long-short equity fund, and Philip has experience previously in investment banking, so Macquarie and Alia Capital, and is going to talk through that briefly. We have a couple of questions geared towards that. Yeah, so Philip, that's, I guess, what I can say about you, but maybe you could talk briefly about yourself, maybe under a minute.
No worries. I'm happy to give a bit more color to my background. So I went to UNSW, and I studied actuarial studies, and I realized, I guess actuarial studies isn't for me. I really like finance. I remember I used to watch Martin Shkreli videos. That was actually my introduction to finance. Pretty funny. And working, I had the opportunity to work at Macquarie, and I had the opportunity to work at Everblue Capital, which is like an independent corporate advisory firm.
Yeah.
And then working at these places, you get more exposed to how I guess the difference between academia, finance, and finance and practice. And so these experiences led me to, I guess, I worked in banking following my stint at Macquarie at Alia Capital. So I worked as an investment banking intern, and I guess investment banking is, it's what a lot of uni students aspire to, because I think it's like Wolf of Wall Street. Although, I can confidently say that it isn't, although I'm not going to speak for everyone else in the industry. But I think that it involves, it's great because it's this very, I guess, finance heavy, but also at the same side, it's an industry in which you get paid or compensated based on transactions. And based on the work that you do to progress a transaction, as opposed to, I guess, like analysis. And so after working in banking for about a year and a half, I realized that I wanted to do something where I had more conviction in the work that I produce. And so what I did was I actually reached out to probably 100 investment managers in Sydney and Melbourne looking for internships. And I'm assuming you want me to go into this more detail later.
Yeah.
Now.
Yeah.
Do you want me to go into more detail now?
We have a couple of questions lined up, but yeah, you could just briefly summarize like that topic.
Yeah, sure. Yeah. So I reached out to a whole bunch of firms, and luckily only one got back to me, and that's Andrew Macken is the portfolio manager here at Montaka Global Investments, and he got back to me, and he had me in for an interview, and then I started working as an intern in early 2019 here at Montaka. So I was doing 4 days a week here, and then I do 1 day a week at uni, and then I finished uni maybe like halfway through, maybe September last year, so I'm not much older than most of you guys. So I worked there for about more than a year before I graduated, and just continued into being a full-time research analyst. So I guess that's a bit of my background.
Oh yeah, nice. Thanks a lot for that quick background overview. So the structure for today is basically going to be, we just have a couple of questions, not too many, but we are going to discuss around them. And so these are questions that myself and Alistair have briefly drafted. Then we have questions from the audience. So on our sign-up form, we had kind of Q&A stuff where you could pop in any questions that you might have. So that's on the audience's part. Then we'll just open the floor up to questions, which I think questions and a general discussion. Yeah. So thanks for that. And you briefly talked about what sparked your interest in the finance industry. So you talked about watching a couple of videos, and what generally drew you to investment banking? I know Wolf of Wall Street stuff, but maybe you could provide maybe a little bit more detail around that.
Yeah, of course, absolutely. So I think personally, what I find so interesting about investment management is that you really are putting your money money where your mouth is. I think in a lot of professions, I don't want to name names, but you spend a lot of time drumming up a bunch of analysis and you present it to clients, but you have no personal investment or no stake in the outcome of your recommendations. Right now, when I think about, actually, you know what, I am going to name names. When I think about consulting and I think about banking, we spend so many hours, coming up with some work and presenting recommendations. But ultimately, you don't really care too much about whether your recommendations pan out positive or negative. But in investment management, like your money is on the line, right? If you think, I don't know, what's an Australian company like CSL as a buy, and you put your money behind that, and you do your analysis, and you put your money behind that, you better have conviction, right? And that's something that I found was incredible and really, really popular. And I guess another reason why I like investment management is that in this profession you are continuously learning, and that's something that I guess I didn't recognize prior to coming in. I'll be honest, I think I got quite lucky actually getting this job because I didn't know too much about the role prior to being accepted or prior to becoming an intern. Beyond just knowing that you'd have to have conviction in the work you do, I didn't realize that the actual day to day is so different, right? Every single day, from junior analysts like myself to portfolio manager, every single person spends their day reading either the news or reading company filings or reading research. You can't afford to be, you can't afford to be lazy. You can't afford to be stagnant in this profession, because everyone else that you're playing against or betting against in the market is trying to improve themselves, right? And so that is also that's something that appealed to the competitive side of me. And I'll be honest, I was shocked because I'm not much of a reader. And when I came into this role, I remember first week I had to read like 5 10Ks, which are like annual reports, and that's like 1,500 pages. That was like previously a year of reading for me. That's what I had to do in like less than a week. And yeah, I would say that it's difficult at first, but if you are someone who is competitive, someone who is looking to always climb up that sort of, build and progress the mountain of knowledge, then this is definitely the industry for you.
Oh yeah, okay, nice. Thanks for that. And you mentioned the point of when you actually you briefly talked about having skin in the game, and that and how that changes your perspective on things and how you have to basically apply a different skill set to try to perform and all of that. So you made the switch from investment banking to investment management, and we know investment banking is kind of tough, but why didn't you venture into anything else like venture capital or private equity? Did you consider these other routes?
So I think if you read online a lot, then you'd think that venture capital and private equity exist in Australia. I know I used to spend a lot of time on a couple of forums like Wall Street Oasis. I'm sure you guys anyone who's interested in finance would have probably heard of it. Look, in Australia, private equity and venture capital almost don't exist. And I think because of the massive pool of superannuation money that exists in Australia, that's why there are so many fund managers. But venture capital just doesn't exist. Or there are firms, but there are very, very few of them. And private equity is different, where because typically you need to do banking to do private equity, but private equity requires knowledge of, you have to be able to actually go through a transaction. You have to be able to lead and walk through a transaction and hold the parties involved you have to be able to, like, I guess, drive a transaction, which means you have to have done banking beforehand, which I guess, I think doing banking as an intern and doing banking as an analyst are two completely different things.
Oh.
Yeah, sorry, I know I've sort of maybe darted around, and I know that probably isn't the most ideal answer, but if you are, like, for the students who are out there and are interested in venture capital, I know there are some firms in Sydney, but there just aren't many. And I'll be honest, I never really thought about it. Probably didn't even know what venture capital was until I started working here and started to look at, I guess, new IPOs, which will come from venture capital firms.
Oh yeah, sure. I think your answer is actually quite good. And personally, it's actually hard to come across the PE and the VC firms. But yeah, thanks for that. Okay, so briefly in your in your intro, you talked about how you emailed like 100 firms, got you got one response, and that's actually where you work right now. So most students, especially guys at uni and people who aren't exactly well versed with how to get in, are used to the conventional route, which is apply today, sit a test, psychometric test, then go for a phone interview, in-person interview, assessment day, and all of that. Now this is more at the big firms. And I'll just like you to share your experience using the unconventional route, which is cold emailing, networking, and all of that. And just compare and contrast between the two. Which one do you think is the most effective, and which one do you think people should spend the most time on? So maybe you could just share your experiences around that.
Sure. So I guess firstly, I'll share my experience, and then I'll explain how my experience may differ from standard viewers. So for me, like you mentioned, I emailed probably over 100 firms. I was pretty resourceful when it came to this. I downloaded this extension called Hunter on Chrome, and it helps you find the email addresses of people belonging to a certain website or belonging to a certain firm. And so I reached out to a lot of PMs at funds across Sydney and Melbourne. And in my emails, I'd always mention that, I've said, I've got these marks, I have got an interest in funds management, I've had this particular experience, please find attached my resume. I'd love to meet for a coffee chat, or potentially learn about opportunities working at your firm or helping out at your firm. Now, at the time, honestly, I think that my resume was very strong, because I don't think you have a lot of uni students who had like a year and a half of actual banking experience in their resumes. So I would have thought that I would have had a much higher response rate, but unfortunately that wasn't the case. Now for Nathan, I spoke to Nathan personally, I think a couple of months ago. I told him a way that he could improve upon the process that I'd used is actually sending through a pitch. So on top of saying who you are and what you do, whatever, of course, keep it short, because people don't have all the time in the world to read your autobiography. You should definitely send a pitch and say, I'm interested in whatever it is, security that you're interested in, and give them, a one-pager pitch, because then it demonstrates that you actually have a real passion for the work that portfolio manager or whatever the analyst does. Because in my sense, sure, I may have had a good resume, but just because I've worked in a particular industry doesn't necessarily mean that I may be I may have an interest in this industry. I may have an interest in investment management. And so I think if you are to do that, if you are to send through a pitch, it would really look great. And even better, I guess, now off the top of my head, if you were to even potentially critique a position that the fund that you're emailing has. So let's say you are emailing Montaka and we have a position, let's just say one of our largest positions is like Spotify. So if you were to email myself or someone here at the firm and, introduce yourself and then tell us, oh, actually, maybe you think Spotify isn't along, and the reasons you think that are X, Y, Z. I'm very sure that whoever is covering that stock would be interested in speaking to you. And really, that's how you get your foot in the door, right? I think investment management is a very meritocratic industry compared to a lot of more traditional industries. Like I know, and especially, banking is very much, you have to have like the best resume, you have to have, and sorry, I shouldn't even say just banking. I should say, if you're going through the conventional path, which is, submit your resume and cover letter online, do all those sort of BS, like testing methods, it's like you're competing against thousands and thousands of people, right? Especially if you're applying for Big Four, you're competing against thousands of people who probably have the exact same marks as you, who probably went to the exact same school as you, but and you may not have like a dying passion for accounting or whatever, and maybe you're unable to actually articulate that. So it's going to be very hard for you to go to the next round, which is also a video interview, by the way. So there's just so many steps involved in the process, right? I think by cold emailing, particularly smaller firms that don't have this like a structured process, if you're able to convey the passion that you have for the work that you want to do, and this extends beyond investment management, then you have a very, very high chance of getting a response, right? I have a friend who works in design, and instead of applying for larger firms, she just sent her portfolio of prior work to a small firm, and they just thought it was incredible and literally hired her on the spot, right? I think if you can display that you spend time, your own time, working on a skill that is valuable to the role that you're applying for, then people will at least listen to you. Even if there is no position at the firm, people will talk to you and give you pointers, because ultimately everyone sees themselves in you. Like I know when Nathan hit me up, I was willing to help him out because that was me like a year ago, right?
Okay, thanks for that, Philip. Thanks for that. And as you said, you have, I'm just going to say something on top of that. You have thousands of people who go through the conventional route, and some people like to prefer to take their chances there. And the unconventional route is slightly harder because it's hard to reach people, but you don't have so many people actually going down the unconventional route. I guess that's where you find the balance. And I think you're able to display your experience and your skills better actually through the unconventional route. Yeah. Thanks for that, Phil. So I'm just going to turn over to Alistair for number 4. So maybe you could just walk us through that question, Alistair. Yeah.
It's interesting to also point out how you're sending all those cold emails and you're saying to attach a pitch or some sort of critique to the positions that the firm might be holding. I guess you can learn those skills either through university or your own research, but this also relates to the question that we're about to ask. It's more about how relevant you feel your studies or your degree was in previous entry-level roles or the current role that you have now. And I guess you can also touch on further later, like what kind of resource or information would you take upon and be trustworthy sources in your role now? Yeah.
So the first question is, how relevant is uni stuff?
Yeah, because I guess when you're talking about the pitches that you make along with your cold emails, this kind of pitches, you need relevant skills, I guess, learning in the academia content that you're talking about previously. How relevant do you think the stuff that you learn at uni is important to the role you have now? Yeah.
Look, I think this is something that I guess varies depending on your background and depending on what degree you're doing. But I guess I'll just speak to students who have done finance, because that's what I did. Look, what you learn in finance it covers, like, I'll say 50% or almost 70% of what you need to know, because at the end of the day, everything comes back to a very, very basic very basic principles of like, what's it called, present valuing cash flows, right?
Yeah.
Anything beyond that, obviously I would suggest that you spend some time picking up new skills beyond what you do learn at uni, just because uni is quite academically focused. But for example, if you were to send, like if you wanted to send a stock pitch, I know that at uni for myself that we learned how to value companies, maybe using multiples or using, I know we were taught how to do like a very basic DCF. But look, I know having worked in the industry, if a student were to hit me up with a pitch, the valuation section is not the section that I care too much about, right? Because anyone anyone can teach a monkey how to build a DCF model. Anyone can teach someone how to do sort of the technical aspects of the job. But really, what we are in what we care about, or what's important to us, is a genuine passion for learning about businesses, right? And so when it comes to a good pitch, when it comes to a pitch that will probably garner a response from someone, as long as what you send through is well thought out, even qualitatively, valuation section doesn't need to be too overly verbose or overly complex. That said, for myself, before I started working here at Montaka and got my internship, I taught myself how to build financial models, and so I used. I remember this website called asimplemodel.com, and they had like free videos explaining how to build a financial model. And I used to spend a lot of time on Wall Street Oasis, and I'm pretty sure they give away a lot of models that are sort of custom built for like particular industries. So obviously building like a model for a real estate firm is different to building a model for a real estate firm, sorry, for a retailer, because retailers, they care about same-store sales and they care about leases and all that sort of thing. But look, if you're going to pitch a firm, you say you're going to pitch, I don't know, as an example, like La Vista, right? You plan to pitch La Vista to a fund manager in an email. I imagine you're going to do the work to learn what's actually important to that business. Uni can only take you so far, right? Uni gives you the theories. Uni will give you the hard skills, but you have to be able to actually apply that to businesses that you're looking at, or the businesses that you're planning to pitch. Sorry, this is a very long-winded way of saying that uni is good, but also you need to really get to that level.
Yeah.
I think particularly, so the investment management industry in Sydney is there really aren't too many grads hired straight out of uni. I think a very safe estimate would be like there's less than 30 hired across the entirety of Australia last year. And so because of how competitive it is for graduate positions, or for positions in general, sorry, not just graduate positions, I think it would be best to do all that you can to accumulate as much knowledge as possible before you go in and meet whoever it is that you're planning to meet, or before you send through those pitches, right? I think investment management is different from other industries like accounting or whatever, Big Four, in that there's literally, I want to say there's no graduate programs, because obviously with a graduate program, right, you don't necessarily have to differentiate yourself. You don't have to show that you're passionate. But if you want to do that, yes, I very highly suggest going significantly above and beyond what's required in uni. I don't know if that answer kind of sucks.
No. It's obviously
showing a passion, right? It all comes back to showing a passion and showing interest. Because if you are interested in investment management and you are interested in piquing the interest of that PM whose long position you're about to critique, you better have done the work, right? If you email me and you told me that, I don't know, Spotify sucks, and you've written like 2 dot points as to why it sucks, I'm probably not going to get back to you.
No. Sure. No, it's definitely a question that's probably on the most people's minds, especially first year,
Yeah.
and I guess fresh uni students that don't really know the difference because they always hear the stigma of, oh, I'll do my own research, I'll be fine, you know, and that and pass by all the uni content. But what you've knuckled down is really good about going above and beyond, and I guess accumulating both sources together is probably going to get you really far in that aspect. And I guess now that leads us into that last question, in terms of a big overview from start to finish. Is there anything that you would change in hindsight, starting from your first 2 years at uni to today, you know, joining us at this Insight event and, you know, providing some kind of exposure experience? Is it something you do differently, or is there, I guess, something else? Yeah, something that you do differently in hindsight?
Not really, to be honest. I think I actually did uni like shockingly well. My advice would be to actually focus in first year and second year. I know that it's probably contrarian because a lot of people will give the advice that marks don't matter too much, but they really do. Yeah, they really, really do. And especially if you want to apply going through the conventional route of like submitting your resume and cover letter and all that sort of jazz.
Yeah,
Marks really matter. And the, you know, society extracurricular stuff that you do, it actually matters. So, you know, Nathan and Alistair, you guys are clearly doing a great job chairing this society, because yeah, look, it does matter, and it builds your social skills as well, and it builds your ability to sort of, I don't want to say the word behaviors, but it builds your ability to like interact on a more serious level, if that makes sense. Because if you think about, you know, all your mates today, they're probably all university students. So the way that you speak to each other differs from the way that you speak to your co-workers when you get your first internship, right? And that's something, I guess, to be aware of in future. I guess one thing that I would recommend everyone who's still in this uni does is really try and learn as much as you can about adjacent like industries and adjacent opportunities. Although I imagine if you're tuning into this, you're probably pretty interested in investment management. But I know, like a lot of my friends at uni, they never really explored what was available or explored what they could have done, and they ended up going like the very cookie cutter route to certain firms, and they never really sort of pushed themselves to learn more about what else could be out there. Because I think, you know, working a full-time job, it's painful if you don't enjoy what you do, right? I'm very blessed in that I really, really love what I do, and that I bounced from like 2 to 3, I guess, professions or industries before finally landing on investment management, and I'm glad that I did. If I'd just done what everyone else in my degree, which was actuarial studies, had done, then I would have become an actuary, but luckily I'd had that experience and tried to be one early and realized that it wasn't for me, right? If you can have the opportunity, take it and see if you enjoy it. That would be the final sort of.
Do you mind if I also interrupt there with that point in terms of how you addressed, I guess, more so the transition between uni and the role that you have now, how you move between the 2 or 3 roles prior? Yeah. Would you, I suppose, you're saying you're happy now. Do you feel like it was meant to be you experiencing those roles prior, or would you?
Absolutely. I mean, if you think about it, what can I compare this to? If I hadn't had any roles prior, what could I have compared this to, right? That's why I say you need to, not need to. That's why I say it's best if you can try and have experiences everywhere you can. And so that's why I made sure when I was a uni student, even like during the sem, I'd be trying to work in certain different professions or cold emailing certain firms, just because, like, sure, being a full-time student is great, but also at the same time, I think you want to try and work in different places. Just just to get that exposure to what work life could be like in a particular industry.
Awesome.
Yeah.
That's really awesome. No, thanks for that. It's good insight. Yeah.
Yeah, thanks for that, Phil. And it's actually really good that you mentioned the whole thing of exposure, because that's what we try to do for our members. We try to give them low to mid-level exposure. So whilst we can't land them roles, we try to have well-established professionals such as yourself to come in and just tell people, okay, this is what you need in the industry, and try to give them the insight that kind of works as exposure in that way. So really, thanks for that. So I just want to tell everyone who is around that, so Phil has been mentioning a few resources when he was answering the question in regard to what he used and all of that. So I just popped that into the chat. So Hunter Extension, A Simple Model, and Wall Street Oasis. So feel free to copy that chat. And
also, Martin Shkreli does modeling videos on YouTube, or he had them on YouTube.
Yeah, sorry, what is that?
I'll type it up for you.
Yeah, thank you, Phil. Thanks, excellent. Thanks for that, Phil. Yeah, so everyone feel free to look at these things in your free time, and that's how, as Phil said, you'll build the knowledge and also interest for the industry. So at this point, we're going to move on to a few questions from the audience. Now, when we actually put out the post promoting this event, that was when the whole short squeeze and GameStop saga was going down. Which really was on everyone's minds at the time, and we actually had we had one question in regard to that. So this person is basically saying, okay, we have this new breed or class of investors who are coming in, the Reddit mob and all of that, and we have seen this huge growth in GameStop. Obviously, when this question was put out, GameStop was like at $400. Right now, it's $41. So we know what happened to that. But like everyone is asking, okay, like where do we go from here? Are we going to see that disruption where we have more retail people coming into the space and displacing our hedge funds, or is this something that is short-lived and will just pass by? What do you think? In just a few sentences.
Yeah, I think that the GameStop situation definitely. To say that it's unique would be an understatement. I think that GameStop, the situation actually, it reflects the power of the internet in that influencers and people with a brand, people with a following, can actually influence the stock markets, right? We all knew that Donald Trump with his tweets could move markets. Yeah, the GameStop situation was incredible. Now, in terms of whether this is something that is sorry about that, my PM walked in.
That's all good.
Sorry, what was I talking about?
So
I'm still in the office right now.
yeah,
So I think the GameStop situation was unique because, look, I think since COVID-19 actually began in February, throughout 2020, we've seen increased retail participation in the financial markets, and retail traders or retail investors. I think they invest quite significantly differently from institutional investors. They're just willing to buy whatever it is they like. A lot of the time they don't care about valuation. They may not care about, I guess, the future potential of the business, because pretty sure everyone in this chat can see that GameStop is a structurally disadvantaged business, right? You're selling physical copies of video games in a brick and mortar store when you can buy video games online using your PS2 or PS3 and don't have to leave your house. And so what I think happened is, so that business, they had really, really high short interest. That is, a lot of people were short this business, and it's because it's obvious that it's a pretty crappy business model. But I think what we're going to see going forward is businesses that are quite obviously disadvantaged, and I guess hedge fund hotels like GameStop probably will no longer be hedge fund hotels, because it's such an obvious short, and this short interest was so high. I think you could almost classify it as lazy to be short GameStop. And that really high short interest is actually a material risk. And so if you were to pitch GameStop and not to disclose the short interest, that would actually be negligent of you. So these are really long and I guess convoluted way of describing the situation. Now, as to whether I think that this is a structural thing as opposed to like a cyclical thing, I think it's a structural thing. I think that, as our friends, for example, are getting more and more involved in the stock market just because of an increasing globalization, because people are spending more and more time on social media, and because more and more influencers on social media are getting involved in stocks. I don't have TikTok myself, but my little brother always shows me his TikTok, and there's always like heaps of people in there just saying, "Oh, you should buy this because it's going to go up 100%." Or buy this because it went up 100% last year, which means it's going to go up 100% this year. And like obviously it's crazy, but I think it's potentially here to stay.
Okay, thanks for that, Phil. Okay, I'll pass on over to Alistair.
I guess when you're talking about, the valuation of companies and these stocks and shorting, I guess all that, and financial modeling, when you bring up those kind of aspects of the industry, you can see more and more automation and application of AI that are able to be programmed and coded to take over these kind of roles. I think there is a serious threat at all to individuals like ourselves that are aspiring towards like the human side of understanding, these predictions, or is there a way that we need to adapt and change to see this kind of, I guess, AI wave coming through?
I think that's actually a very, very insightful question. Now, historically, people have, I guess, associated the words value investing with purchasing low P stocks. That is, companies that are cheap on price to earnings ratio, which is market cap divided by net income. Now, as you mentioned, that doesn't require any analysis. You and I can go and do a filter of the top ASX 200 companies by PE and go and invest some money in all the cheapest ones, right? Like you said, that I think that has become automated, and there's a lot of quant funds out there that they probably don't do that strategy because it's overly simple, but yeah, they've evolved that strategy, so on and so forth. I think valuation and financial modeling, it's more of an art than it is a science, in that the model itself is extremely basic. It's probably what you've learned in like your first year or second year finance courses, in that the present value of, or like the intrinsic value of an asset is the present value of its cash flows discounted back till time zero. That remains the same. However, the art of it comes into forecasting what the revenue might look like in 2 to 3 years, what the earnings might look like in 2 to 3 years, how might the balance sheet be flexed to provide incremental returns to shareholders. And so there's a whole bunch of other sort of tweaks and other sort of changes to your models that you can implement that protect the field of investment management from AI and from machine learning, right? So for example, let's say, I were to build a model today, and let's say I build a model for company ABC, and ABC's share price is $100. And I built my model based on all of my research, and I've spoken to maybe past employees, I've spoken to like suppliers, I've spoken to customers, and I just believe that their sales are going to grow at 30% year on year. And I build my model, and the model says the share price should be $300. That is the value that of fundamental analysis, and that is represented through my little tweaks to the model, if that makes sense. And that's something that can't be, I guess, AI, machine learning, to use those words.
Yeah, of course. No, unreal answer. Thanks for that.
Yeah. Okay, thanks for that, Phil. That was actually quite insightful. And most people are really scared because they see all these roles disappearing because big tech is getting into almost everything. You have heaps of machine learning and AI. But yeah, thanks for that. That must be reassuring for everyone here and everyone who's also going to watch this video. Just the last question, and this is a kind of like trying to drill on your macro thoughts, maybe where you think we're heading right now. So there's been a lot of talk about crash coming soon. I suppose maybe I've gone, like at least me personally, every time I go on Google and they bring up all the trending searches for me to have a look at, there's always a stock market crash 2021. So you have heaps of people actually thinking that that might actually happen. Most people are saying heaps of stuff is overvalued, and we just want to get your take. It's kind of like a risky question to answer, but you could just let us know what you think. So do you think people should be worried about where the market is going, or you think there is nothing to worry about, at least in the short to medium term?
Yeah, gee, it's a bit of a loaded question, isn't it?
Yeah.
Look at Montaka, we aren't macro investors. We are bottoms up fundamental investors, and that is, we look to invest in businesses that are long-term winners with multi-decade runways for growth, with structural advantages, resilience, and world-class risk controls. And so, as an analyst, I don't spend too much time thinking about macro and thinking about flows and positioning and so on and so forth. But look, like you said, it's pretty hard to conclude that things aren't looking that frothy, right? You have SPACs being launched every single week. You have cryptocurrencies up like more than 50% year to date. It seems like everything is going crazy. In regards to that, I don't have any sort of particular financial advice for any viewers here. I think that if you are a long-term investor, not a trader, I think as long as you have your money parked in the highest quality companies, look, you should do well. And I think increasingly I'm learning that a big part of investing is to there is alpha or outperformance that comes from extending your time horizon and thinking beyond 12 to 18 months, right? So everyone, like you said, the news and the sell side are all focused on the short term, like, oh, inflation is rising, or there's a crap ton of SPACs, or Bitcoin is dropping, or a 10-year yield is 1.3, whatever. That's all noise, because if you've invested in high quality companies over the next decade, they should be able to provide you with great returns, irrespective of what happens in the meantime. And so I guess, to use that Reddit meme, you gotta have diamond hands, right?
Nice. Thanks for that, Phil. Thanks a lot. And thanks for that your macro view on the economy. And as you said, we don't exactly give out financial advice, but thanks a lot for sharing your views. Okay, so right now I'm pretty much going to open the floor to questions. So we have a couple of people in. Feel free to just type into the message box IMS. So IMS, in case you have a question to ask, so that we can get an order, or at least know that you guys might have a few questions. We're just going to wait for, or you could just type into the chat, maybe you have a question or anything. Or at this point right now.
I'm surprised you guys didn't ask me what a day looks like what I do on my day-to-day. Very surprised.
Day to day?
Yeah.
Or maybe you could run through that right now. But yeah, but you pretty much went through it like through the questions. So
Yeah.
the modeling and all of that, the reading companies, liking to follow companies and all of that. But I just saw Liam's, I saw Liam, your microphone. So
yeah, sorry, can you hear me?
Yeah, yeah, we can hear you.
Firstly, thanks for your time this evening, Philip, and the opportunity, Nathan and Alistair. Thank you for hosting. Yeah, my exact question was, can you outline like what a day looks like for you? What do you do? You know, in terms of research, you know, are you on the phones to management for certain companies? Are you just digging through annual reports? So you know, what are you doing on a day-to-day basis?
Yeah, sure. Great question. Yeah, so, gee, I remember when I first started as an intern, I was just shocked at the amount of reading you need to do. And actually my PM, Andrew Macken, who used to work at Kinnikos, he told me that he reckons 80% of investors today, for the stocks that they own, they don't even read every single page of the annual report. And so even doing that, you put yourself in the top 20% of people who actually own the business, right? So every single day I'll come in, sit down, read the public filings. Let's say I'm starting on a new business. I'll read all the publicly available filings. That is the 10K or annual report for this year. I'll read last year's, and then I'll listen to all of the earnings transcripts. So every quarter of earnings transcripts. I'll go through and I'll read broker research from Goldman Sachs, Morgan Stanley, whatever, all those brokerage firms. And then from there, I'll build the historical financial model. And so that's pretty easy. It's literally just typing in what the balance sheet was over the last couple of years. And I'll like read the financials and be able to sort of judge. That should tie into what I've read in the earnings transcript. So I should see, oh, sales went up 10% and management explained that this is the reason why. And I'll say, you know, days receivable went down this much and this is why management went why. And, you know, in this point in time, I'll collate a whole bunch of questions that I have and hopefully I can answer them. And from there, I'll begin to come up with a hypothesis. And I think it's very important that you actually have an hypothesis when you're considering an investment, because I guess it's very easy to, I guess, drink from the water hose. That is, if you read an annual report, you are reading the narrative that's been provided to you by the management team, if that makes sense. So of course, when you finish reading it, you're going to feel some type of way. Whereas if you have a narrative or you have an idea or have an hypothesis before you start reading, that is, you're looking out for certain things, then it's very easy to dispel the noise and to focus in on what really matters, right? Because reading 100 pages, there's going to be something in there that interests you, or there's something in there that takes your interest if you don't know what you're looking for. So yeah, modeling, reading annuals, reading public filings. So a lot of big funds use expert networks, and expert networks are basically companies that are designed literally to give you access to ex-employees or suppliers or customers of companies. So for example, last week I was on an expert call with the former authentication manager at a particular firm that I was looking at. And so in these calls, you're able to ask, you know, questions that you can't have answered by the public filings, because obviously the public filings aren't going to give you everything, right? Now, as an individual investor, you probably can't afford these expert networks. They're pretty expensive. But what you can do, and what Peter Lynch advises, is a method called scuttlebutt, which means you can literally hit up ex-employees on LinkedIn. Maybe in their annual report, the company talks about who their suppliers and who their customers are, and you can go and literally call those companies and ask them the questions that you have. And just because you don't work at an institution doesn't mean that you can't get access to this information that probably is thesis make or break, but isn't actually available in the public filings. And then I spend a lot of the day reviewing. So I'll spend maybe, like on a normal day, I'll spend 60% of my day covering the existing names that I like, reading news on the existing names that I cover and thinking about the implications for the company. And then I've spent a lot of time looking at new potential investments. And what else do I do? I think that's about it. Sorry, it's a very long-winded answer.
That's a great answer. Thank you, Philip.
No worries.
Once you have, I guess, built this thesis on a company, I know you mentioned like you will go outside and put a bit more weight out of, you know, considerations outside of those financial, like talking to management and the likes. But you've built this thesis and you've gone, you know, you've read through the annual reports and that, and then you go and look at the chart and you look at that this company's been in a long-term downtrend for the last 4 years. I know in finance we're taught a lot that, you know, valuation and pricing is two different things. But how much weight do you also put on, you know, going through and looking at the technical indicators and that sort of thing once you've built this thesis, you know? Because
good question, really good question, Liam. Look, personally, I don't look at any, I don't like do any sort of technical analysis. I know that there are a lot of portfolio managers that do conduct technical analysis because I believe it helps them with, identifying optimal entry and exit prices. So as in we should buy when it's below the whatever moving day average. Look, I don't know too much about that. So I personally don't, but I think, I think it also really depends on your investment horizon, right? So let's say I conduct a valuation on a company that has had a very poor 4 years, and I believe that the last 4 years aren't reflective of the next 10 years. I believe that something's going to turn around, and I've done the research to confirm that something should turn around, right? If I believe it's worth $100 today, it's priced $100 today, it's going to be worth $400 in 5 years' time. Would I be conducting technical analysis to buy it at 95 instead of 100, or buy it at 92 instead of 100? If it's a four bagger, it doesn't matter. But that said, there are definitely PMs and there are definitely funds that conduct technical analysis. I think it all depends on your time horizon and really depends on like your personality. As an analyst, my role is to recommend investments or recommend positions to our PMs. And so after I compile my research report, which includes my valuation, which includes my recommendations and so on and so forth, I'll usually sit down with the two PMs that we have here, and we'll basically unpick the entire thesis, talk about what's good about the company, what sucks about the company, where it should be. It's a real grilling, and then they will decide whether they're going to take a position. Unfortunately, I have no discretion over what happens then, and to be honest, they may use technical analysis to decide whether they want to take a position or where they want to take a position and so on and so forth. But that's something that I'm not sort of privy to.
Yeah, I understand. Thanks, Steve. That's a great response. Thank you.
Yeah. Thanks, Liam, for those really insightful questions. Abhishek, did you have any questions you wanted to ask? Okay, so yeah, that seems that's all. That's pretty much it. So yeah, thanks, Phil, for answering those questions. And thanks, Liam, for bringing your questions across, because remember, the reason these, yeah, Abhishek says don't have any questions. I think, Phil, you pretty much covered everything that Abhishek wanted to know. So the good thing about these sessions and being small is that Liam, the same way Liam asked the questions that were on his mind, you can answer them in the best way. So thanks a lot for that, Phil. And that's pretty much all the time we have for today. Phil, any closing thoughts about anything? Any last tips?
No, as long as, I think best of luck to everyone who wants to get into this industry. It's very, very competitive. But if you can find a way to I guess, showcase and highlight your passion, then I think your luck is maybe on your side.
Yeah. Oh, okay. Thanks a lot, Phil. Okay, that pretty much wraps it. And I just want to say we're actually going to have a cloud link to this video because I believe most people weren't able to come into the session live, but we're going to have a cloud link on our social media. And Liam and Abhishek, feel free to hop onto the video in case maybe you want to go through a few parts. Good thing we have the chat where we typed in the resources. Hopefully I've copied and pasted that into a Word document. That's pretty much it. We're actually ending right on the dot 7:30. Phil, I'd just like to say thanks a lot for setting aside your time. I know it's the evening. You're most likely kicking back at home right now, relaxing. Thanks for...
I'm in the office. I'm still in the office.
Yeah, thanks. Yeah, thanks for sacrificing the time and all of that. And hopefully we hope to have you in the future, maybe if we have a larger room of people who want to hear your experiences, and this might be down the line, maybe down 6 months, where you have even learned more to your already rich information base. But yeah, thanks a lot for that, Phil. And that's pretty much it, guys. So I guess we'll wrap up here. Yeah, and feel free, Liam and Abhishek, in case you maybe have something that interests you, maybe another industry that you maybe want to have a look at, feel free to message us on our social media. We're going to respond to you immediately. And yeah, the events are all around you guys. You're the guys we are trying to provide the value to. Okay, that's pretty much it. Thanks, Alistair. Thanks, Phil. Thanks, Liam and Abhishek. And that's pretty much it. Alistair, do you want to say something?
Cool, mate. Appreciate your time. Hopefully we can catch up soon again and, you know, chop it up. We should be fine.
All right, no worries. My pleasure, guys. Best of luck.
Okay, guys.
Feel free to reach out to me if you have any questions or have any pitches you want to pitch me.
All
right.
Okay, thanks a lot, Phil, and enjoy the rest of your evening, and we'll stay in touch.
Thank you.
Okay, see ya.
Goodbye.